Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. We had an attempted assassination of Donald Trump over the weekend, and luckily that attempt was a failure. Crypto responded positively to that a few days ago, a couple weeks ago probably. I mentioned Trump being a large potential bullish factor in crypto. I don't think that's a surprise, but that's likely why markets reacted the way they did, pricing in potentially a second presidential term for Trump. So that certainly wasn't on my bingo card and has helped prices move higher. Other things we were watching, GOX distribution not quite started-ish yet. Again, this is all sort of nebulous. I'll put this link in the description of the video. Each person's going to have to take away what they think is going to happen, read about it, or don't care. Doesn't really matter to me. I think at this point it's starting to get priced in. It's been attempted to be priced in every time there's been an announcement or wallets moving or anything, right? And it's not going to be 142,000. It's going to be around 75. And of that 75, it's going to be, who knows, right? Maybe another Germany equivalent. Now, as much as everybody wants to think Germany is finished selling based on the wallets, which undeniably money is out of this wallet. We went from a week, maybe two, of Germany attempting to do this themselves very poorly, and then giving OTC custodians the coins to do it for them. There's no knowing whether or not they are finished. Maybe they will announce everything's sold. Maybe they won't. Maybe we'll know a couple quarters from now. I don't know. But to just assume it's all sold already is a tall order. I'm not saying it can't be done. It's just potentially unlikely. Maybe they come back Monday and they just sell everything off again. They being the OTC providers. Maybe the ETF flows have absorbed much of the German selling, right? We don't really know. But based on price so far through the weekend, maybe the selling is closer to being done / priced in. We'll know more throughout the week, obviously, this week. If, for instance, we are back down to 57 Monday, Tuesday, then they clearly probably weren't done, right? Depending on ETF flows. Miners still capitulating, hash ribbons still bearish. Potentially they're getting closer to being done there as far as holding in the unprofitable zone. What I think people don't understand, or they fail to understand, is that the more selling we have here, as long as we can overcome this and absorb this, we go higher. Is there going to be more selling later on? Probably. But to eat through such a massive chunk of whatever this ends up being, miners, I think my estimate's like 20 to 30,000. That's just known wallets, BTC. So if we could just eat through all this, that'd be great. Now the ETH stuff, I still think is going to be bearish for ETH, especially at least in the first month, maybe sooner, maybe quicker if we're bullish. So that's something else to dodge. As far as technicals, we'll take a look at all this obviously, but we're still below the cloud, which is fine. We're above the 200-day moving average. We went from looking like we were about to teeter off of a cliff, off of a 500-foot nosedive, to stepping a few steps away from the cliff. So are we blanketly bullish? We are not, but we are certainly less bearish than we were the past week. As far as flows go for the ETFs, we hit a 1 billion inflow. Let's take a look at the basis trade. It's still there as far as the basis, so it's probably not the basis trade. It's probably not basis trade related. If I had to guess, it's probably some sort of quarterly or monthly allocation that's potentially price agnostic, potentially won't be some sort of continuation. Anytime you're in a range for a long time, people tend to just write off price action until we're above or below. And then it's up to buyers and sellers to step in. And it looks like we had a buyer step in or multiple buyers step in to prevent us from going lower. But they were waiting for whatever reason, either calendar or price. And so far, it's helped us pretty significantly. Looking at the basis trade, for people who have no idea what I'm talking about, some of these flows on the ETFs, a couple weeks back, we had almost a $2 billion inflow. And what most of that likely was an arbitrage trade where you are short futures via CME and a long spot via ETF. There's a 10% basis you can capture here, essentially risk-free. And so if we're getting a bunch of inflows and prices isn't going anywhere, this is probably what's going on. If we look at in coin terms as far as open interest is up a little bit on the CME as well. So I don't think this was basis trade related, because if it was, we would be lower than 57, likely because that's essentially a neutral trade where there's no direction one way or the other that price is pushed, because the futures leg of the trade pushes price down. And really what we want to see is what we saw in the first 10 weeks. The first 10 weeks we saw huge net flows. So it's not going to be 1 week or 2 weeks or 3 weeks. It's going to be just persistent and consistent flows that are going to help push price higher, higher, higher. We still have a bunch of stuff to eat through, right? So it's going to take some time. As far as the ETH ETFs, this was Eric from Bloomberg last week saying they hadn't heard anything about the ETH ETFs from the SEC, and you just got to wait. So there's really no definitive answer as far as which day we may hear something. But if you're bullish ETH and you think the announcement at the very least is going to be bullish ETH, I think this week, next week, the week after, whenever, up until the announcement, you are just directionally long ETH with an expectation the prices go higher. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PBI, DBA, Kraken. The TREMP coin has had quite the journey since the event at the Pennsylvania rally. Not exactly my first thought is to figure out what's going on with TREMP coin, but there was a little bit of a triple bottom attempt leading into the pop, and that's kind of how things usually go. You kind of need GME's classic example, Bed Bath & Beyond classic example, AMC. You kind of need some sort of technical setup usually to really get a massive effective move, either bullish reversal or bearish breakdown. In this case, none of it was held because it's a meme coin and it really has no value, but always interesting to see how things align on the chart versus events. Looking at BTC, we are back above 60, briefly above 61 there, held above 56, which was the May low, and not too much has changed week over week. We're still kind of in the twilight nothing zone where we're below the cloud, waiting to sort of burn off this resistance. Still below any trend metrics on the daily cloud that tell you to expect higher highs. Still below the yearly pivot, 62.7, and we'll know a lot more Monday US session. Even tonight Asia session, if we get more selling or not. It's just a waiting game. You know, there's nothing to do for me here. And I think we'll get a better setup eventually later on. You can always go long. You can go long at any point and say, you know what, I think this is XYZ, whatever. But if you have a system and your system tells you no, then it's a pretty good idea to pay attention to that system if it works for you. This is the 140, the 20-week moving average, and the 200-day moving average. We're back in between these two key moving averages, just more of a mixed bag. Ideally, we want to be back above the 20-week moving average, which is essentially the daily cloud at this point. We also have the alligator, which is a low time frame, 5, 8, 13 moving average system, which does a pretty good job at giving you a heads up on trend. And it's starting to turn. It's still bearish. You'd be stopped out of a short trade here based on breaching the midline, the red point here. You can see in a bull trend, we tend to hold above the midline, especially in a bear trend, we held below. So now we're in this intermediate phase where we're going to try and figure out the next step, but it's certainly not maybe as bullish as it feels, considering we were going straight down for 2-3 weeks based on these trend metrics. It's not quite ready yet. Now, if we look at like the 4-hour cloud, we got a couple closes above the 4-hour cloud. 4-hour cloud still bearish. Kumo twist upcoming here, bullish TK cross. So we're making headway towards bullishness. If you think this is eventually going to play out as an inverted head and shoulders, right, you take the trade. But I think it's a little early. I think we're going to need to see and wait and find out what happens at 60, what happens at 62, what happens Monday. Do we get more selling, right? All this stuff. It's just a lot of unknowns still, and a lot of fresh supply potentially coming just to see how the market reacts to that. If this does play out, I like a retest essentially of all-time highs of the range, but this is probably a end of July thing and not a this week thing. One way this chart could look very strange is if we get an ETH ETF approval announcement, we break 63, and then we get the ETH unlock, and then we go back to 60 or something, just because it is bearish for the entire market, potentially, or Bitcoin shrugs it off, right? Again, there's a lot of if this, then that, what happens, wait and see, news event, positive, negative catalyst. Very hard to navigate in the near term. In the mid to long term, it's not going to matter. which is why I'm just going to wait. But if you wanted to trade the 4-hour cloud, you could. You could say, you know what, Josh, this is a 4-hour Kumo breakout, blah, blah, blah. I'm going to go long. Yeah, you could. Your stop loss would probably be 56. So you'd probably want to dial back the sizing and leverage accordingly, but you could do that. Now, this is BitX. I think it's up 10% overnight right now. But something else that I'm watching, just everything outside of spot crypto. So this is 2x ETF. It's been in this channel for quite some time now. Some of this is fee decay. Some of this is just price. But for me, it's less important what happens from, let's say, 28 to 38, and more important what happens between 38 and 42, 42 and 46. Once we're potentially out of this, whatever this is, falling wedge, downward channel, what happens here? That's way more important to me than what happens between 28 and 38. We've also got the Bitcoin spot chart against the S&P, which has had a nice good puke on a relative basis, and looks like it may try to recapture the 30-day moving average. Why the 30-day? Just some monthly moving average. You can see how it was into the ETFs. You can see how it reacted post ETF approvals. And since the high, we've kind of just chopped around and pulled back a bit. So I think the next push up in ETF Flows land will be some sort of technical evidence that we are handedly outperforming the S&P again. And we're still early. We're still early if we look at price since halving all the way back here in the black line. This is day 85. Typically, we don't do much of anything until day 100 plus. We're still early there. Most of the fun is yet to come in that regard. And if we look at performance in cycle low, we're 600 days out now. And again, it's the next 600 days. That's where the fun happens. Really, it's the next 500 days, 400 days, whatever. This is a marathon, not a sprint. We're going to have all sorts of wacky, crazy stuff happen in the next 500 days. But if this cycle is anything like the previous two, we still have plenty of upside left for the remainder of the cycle. If you don't like either of these models or metrics, we can look at Econometrics, which is extremely bullish. I don't think I'm quite this bullish. I like 300-ish at the top of this cycle. This gives you a min-max based on all the cycles as well as an average. And we're at the bottom of the range. So if you're a long-term DCAer, you should have no issues continuing with that path. Not financial advice, but plenty of room, plenty of time. We got plenty of time left. Power Law Corridor is another one that's really great at giving you some idea of what's going on. It doesn't have to be perfect. It doesn't have to nail the top and bottom every cycle. But it's done a pretty good job of telling you where support and resistance may be. And really what we want to see when this thing will take off significantly will be when we are above this midpoint, this green line, which currently is around 85K. And the longer we put this off, now let's say we go back to 74, we chop around a little bit. Let's say we don't actually breach this midpoint until Q4, which is in the 90s at that point. That just, to me, pushes the inevitability of a thrust towards the top of this power law resistance, pushes it into mid-2025, late 2025. But Q4 should be great thanks to liquidity, thanks to rates coming down. And then that should lead to a very interesting 2025. APSK32 has done great work with visualizing different types of analysis on the power law. He likes to think of it as years forward on support. I'll let you watch this animation and explanation. It's excellent. But just another metric model to think about. Is it perfect? Is it going to fail? Don't know. But it's something to watch here over the next 300 to 600 days for sure. And even beyond. To me, the key isn't whether or not we're going to hit 300. It's what happens at 300. Do we just sell off? Do we pause? Do we do nothing? You know, what does MVRV look like? Also, all this other stuff a year from now, that's going to be important to look at. Looking at ETH, also not much going on here. It survived the near bottom support. It's back above the 200, below the cloud, below the 20-week moving average, below the midpoint of Pitchfork. So it's just a lot of just nothing here to me. Still in the range. It doesn't get exciting until end of July above 3,700. So there's a lot of room. There's a lot of stuff that could happen here, but it's certainly less bearish than it looked below everything. It's sort of back in the safety comfort zone of this rate of change. Maybe most importantly, it survived this multi-year Pitchfork Now, there was a melt up in 2021. We may get a meltdown in recovery. We had a melt up in recovery to mean just another model to watch. You can't really trade off of this per se, other than hoping and praying that this is the bottom, or thinking that anything below this is just a buy, and eventually we'll get there. We'll get to 10K eventually on ETH or whatever the target may be. But this is a 2018 pre-COVID trajectory that we're still barely holding on to it, but we're holding on to it. That gives us a nice target of 10K eventually. Sol also looks fine, right? It's ranging. It's below the cloud, below the 20-week, above the 200-day. It's got some sort of multi-month triangle and or descending triangle and or near-term W. Like, there's all sorts of stuff here. I don't think this quite gets bullish until it's above 160. And then every dollar after that, my confidence goes up. So we're close. You could just say, I think this is going to be a breakout and it's enough. This W is enough because it measures to like 350 plus based on the range. Or you could just wait. You can just wait for 161 and pull the trigger. It's up to you. Not financial advice again, but I do like that this has had this asymptotic movement to it. It's slowed down considerably. Ideally, up until this point, you've had buyers and sellers come to an equilibrium. We've got Sol ETF hype news cycle coming. Whether or not it gets approved, probably won't, whatever, blah, 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 right? Okay, all that stuff, cool. But the most important thing is, what does this look like above 160? And then can it hold those levels into Q4? And there are a lot of charts on the legacy side that look similar. As a reminder, I use a different cloud for legacy, 1852 104.26 versus 2060 120.30, in case you're wondering why these look different versus crypto. Those settings change based on days of the week, days of the month, 24/7 versus 9 to 5 trading. So SMCI, much like Sol, had this crazy parabolic move and it's gone flat for many months here. It's starting to come out of that consolidation, measured as a triangle, measured as being above the daily cloud. It's above moving averages. It's got a very clear stop loss to me at 750, maybe even higher now. This has a split coming. It's being added to the NASDAQ 100. A lot of people are like hyping it, a lot of dumb money. Okay, whatever. But it looks good on trend. It looks good on the cloud. I don't know where this actually goes, if it goes to 200 post split or not. But I like this trade a lot from a setup perspective. MSTR is a similar spot if we're just bouncing around here. It's also nearing the end of a triangle consolidation that it's held for many months here. It doesn't make sense to me fundamentally why it's worth what it's worth. This doesn't have to break down. It doesn't have to break up, but I like it better on the bottom half of this pitchfork. We'll see if I get it. But if this breaks up, it's going to be 3,000. I don't think that happens tomorrow. I think this happens Q4, but it's going to keep grinding by the looks of it. And it's just something to watch, right? For all these charts that I'm showing, they're all in various stages and forms of some sort of pattern or breakout trade, some sort of trend continuation or breakdown. CleanSpark, the miner, getting close to doing something. I mean, this is an extremely tight consolidation that it's been in for many, many months. You can say that it is at its valuation here or not. That's fair, whatever. I just like the technicals on this. And I like how this measures to basically a 2x from here, potentially, if this recovers. So depending on your confidence between all of these, CIFR's another one. Just grinding slowly, grinding. Does it break down? Does it break up? I don't know, but it's on the bullish side of breaking up. Is a quintuple top a thing? I don't think so. So I think this breaks 570 eventually. It's also interesting that these miners did not break down despite Bitcoin breaking down. CleanSpark, not a AI data center adjacent miner from memory. CIFR, I think, is working on that. All that stuff to me doesn't really matter. The technicals held, that's the most important thing. So that's another setup I'm in. Uber's another one. I really like this setup. I'm just kind of all over the place here. Crypto, not crypto. It's more about the setup in the cloud, the breakout trade potential, the chart patterns. It's all the same stuff. It's just a matter of, okay, this is Uber. Do I like it? Do I hate it? Do I want to watch it? Do I want to trade it? That's what you have to decide. Intel's another one. Didn't get a lot of love down here in May, June, but it did have a double bottom. Now it's in the daily cloud. Potentially it's some sort of NVIDIA broadening AI data center, blah, 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 right? I don't care. It doesn't matter to me, but the technicals look better than most of crypto if I'm taking a trade, right? Even all of these, MSTR, CleanSpark, CIFR, we'll go to the next one, which is Lucid, which is a EV company. Should have taken this trade. I did not take this trade, but this is the type of thing that trend technicals should give you a spotlight for. Lucid, this company, has been down only for 2.5 years, and for the first time a couple days ago, it closed above the one-day cloud. It had a triple bottom, inverted head and shoulders before that, and nothing in crypto quite looks like this, and nothing in crypto quite looks like Pfizer either. Pfizer is Pfizer. It is what it is. Triple bottom, quintuple bottom, whatever, inverted head and shoulders. It's held above the daily cloud. This chart continues to look very interesting and appealing, especially after being down only for a couple of years now. Square is another one. This is on the weekly. A lot of people have been talking about this and looking at this. It is Bitcoin adjacent. This setup probably does best into Q4, so I'd manage that appropriately. But it's held in the weekly cloud, just barely. And the goal here is to survive until it's back out of the weekly cloud or back at 87, 88 for the breakout. So you can just set an alert for either of those points and do nothing until then. This one's definitely going to need some time. KWEB's another example. Starting to get out of the weekly cloud. Chinese internet ETF, stuff I've been talking about for a couple of weeks now. Some people are going to hate this. Some people are going to love this. I just like the setup. Again, this looks better than most of crypto to me as far as having an obvious mean reversion trade higher in the near-ish term. TLT is another one. High time frames, 3-day cloud. Essentially been down only for years. Starting to get back above potentially this time frame's litmus test for bullishness. Anything above 96 and it's go time. If rates start coming down, if dollar starts weakening, if we start issuing less debt, which we won't, but these are all ways that this could start to perform well. This definitely is not going to hit 160 anytime soon. Let's be clear here, but it's a very interesting setup and trade that's been beaten down for a very, very long time. Last week, we finally had the dollar breaking down below the daily cloud. As I thought would happen, this would act as a tailwind for us. Now that the German selling is gone, is the GOX selling enough to not matter as far as expecting some tailwind for BTC? Will we see a tailwind at 103? Will we see a tailwind at 102? We'll see. But we are on the right side of this cloud. We're on the right side of this trend to expect bearish continuation for the DXY, which is an inverse of BTC. So we want a weak dollar. As far as legacy indices, one thing to watch for this week on the NASDAQ, on the S&P, this is the futures. They both have a pretty wide TK disequilibrium. Maybe NQ more so than ES has this TKC clamp starting. And it definitely says be careful up here. It definitely says if you're adding to longs, you got to use a tight stop. Because if this were to flip bearish, the mean reversion point is significantly lower. That isn't a call. That's just saying we are overbought. We are very overbought. We've been overbought for a little while. And now that we're starting to slow down, that's when we risk a similar March, April, May picture where buyers and sellers come into an equilibrium and we could potentially roll over. So this could burn itself off over time throughout the quarter or quickly mean revert. So you just got to be careful with both of those. So BTC looking okay. I don't think we're going anywhere super quick here, but 60 feels better than 55. I think everybody can agree with that. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.